Well, welcome back to my channel today. Today I have a special guest. I have Ivan Oberon, and he's with Edge Home Finance. We're going to discuss one-time closes and construction loans. So with that, I'm going to turn it on over to Ivan and let him tell us kind of where this product can be used and a little bit about himself. Ivan?
Sure. Thanks for having me, John. Always happy to collaborate with professionals that just really are seeking to take care of their clients. So thank you for having me on.
You
And
bet.
one of the things that I think you can probably agree with that we've had an issue with over the last many years has been inventory.
Hmm.
So one of the things that I made my focus is really being able to resource the builder so that we can create more inventory for our buyers. And who doesn't want a new house? So this product is designed for somebody who maybe really wants a new construction home, or maybe there isn't really enough inventory in their particular market right now, but there's some development going on within the kind of area where they're looking for a home. So what this allows us to do is allows us to approve the client for the purchase of that home and to include the construction dollars. And a lot of builders like that because now it takes the risk or the qualifying need for their construction loan to build the home first and then sell it. Now they can
Hmm.
essentially sell the home, say the home's going to be $600,000 when it's fully built and under contract. They can sell it to you under contract for $600,000, and the loan that you get pre-approved for now includes the construction dollars that would be released to that contractor to build your home. And of course, the budget can include any of your customizations, any of your finishes, any of the other things that they want to make custom for you. And a really cool part is that at the end of that construction period, let's say it's 10 months or 12 months, that loan converts to that full 30-year term on a conventional loan product.
Okay, well, very nice. So on something like that, are there dollar limits on size?
So yes, the loan size cannot exceed what the conforming loan limits are
Okay.
for whatever the general area is. And right now, the conforming loan limits just right around $760,000. So depending on what that purchase price is, that's gonna really fit probably the majority of the U.S. markets.
Nice. And then with regards to like down payment, is there a minimum down payment that a buyer would have? Let's say I'm approved for 700,000 to go build this home. What would my down payment be?
Yeah, that's a great question. As long as the loan itself meets that conforming loan limit, you can go as little as 5% down
Hmm.
on this. Let's just say you're purchasing in maybe a little bit higher end neighborhood, and that purchase price is going to be 1 million or 1,200,000. The now you can't do 5% down, right? Because the loan amount can't exceed the conforming loan limit. So then your down payment would have to increase in proportion just to get the loan size back down in that $760,000 range.
Okay. And then the builder, and now one of the advantages I can see is that they don't have to worry that somebody loses their job. I mean, once they close, they close. So not that they're planning on losing their job, but uh, they wouldn't have to worry about something happening during the process. Is that correct?
Correct. Yeah, and that brings up a really good point, actually, is the lock period, right? So when you lock your interest rate, the lock is good for until you close your loan. And typically the loan, like any other loan, is closing in less than 30 days. So as soon as that loan closes, the lock is set for the remainder of the 30-year term. And you're absolutely right. You don't have to requalify 10 or 9 or 12 months down the road when the construction is built. The loan essentially just converts or modifies internally, and you move into your home with a fixed rate mortgage.
Fantastic. And then with regards to the construction interest that's occurring during that construction period, how am I paying that?
That's a great question. So during the construction period, you're only making an interest-only payment. So
Okay.
it's keeping your payments as low as possible. And if it's this is also available for VA. So a cool
Oh,
thing about a VA loan on with this one-time close construction is the veteran does not make any payments during the construction period. If it's not VA, if it's conventional, then you're making only the interest-only payment, so it's the lowest possible payment until the construction is complete and it converts, and then it goes back into your full principal and interest payment.
wow. Okay. Well, that's amazing. So really it's almost like a, let's call it a 30 and a half year loan if it takes 6 months for it to
Right.
build.
Yep.
Okay. And the builder likes it again because there's no risk that the money's going to be there. But I assume they do have to have various milestones in order to get their construction draws and their releases. How does that work with the title company and the borrower so that they can dig the hole and get going?
Sure. Yeah, in the beginning, when the loan closes, there's what's called the initial disbursement, which is whatever the agreed upon purchase price is minus the holdback for the construction budget. So let's just say that construction budget is $400,000. They're going to do whatever the loan amount is for that purchase price minus your down payment, and then hold back the construction dollars, which goes into what's called a fund control account. The builder actually receives an initial advance of construction dollars so that they can start the project and get it ground up. And as the project goes and they complete certain milestones or certain draws, they will then submit for a draw request for the amount of work that's been completed, and then they get reimbursed for that amount as well. Right. So essentially the draws work in advance of the construction to keep the construction going.
Wonderful. And can it be used to purchase the lot initially too? So if I'm going to buy a lot and build this home for 600 grand, can we take the 125 out to buy the lot, or how would that work?
So technically, yes and no. So
Okay.
the purchase of the lot is included if and when the plans and permits are ready to go. If the lot is just the lot, it's not entitled yet, the permits aren't ready, you can't start construction yet. That's not for this product. That would be more of a land acquisition bridge loan, because this
Okay.
product is designed to purchase everything in one and give you the construction dollars and basically start construction day one. If it's going to take a while to get there to where the permits and the plans are going to, say it's going to take 4 months to get those approved and you can't start construction yet, then that would be more of a bridge purchase loan for an entitled lot, not a construction ready lot.
Okay. Or if somebody just started the process and then waited till they had all that and then did it, could they do it that way too? And then bring the
Sure.
lot down?
Yes, and I work with a lot of investors. So what a lot of my clients do is they will buy the lot. And I have three going right now in San Diego, and they're
Wow.
buying seven more. But what they do is they typically acquire the lots cash with investor funds and partner funds. They'll acquire that lot. They'll go through the entitlement process, their architecturals, their engineering, their planning process. And then once they're about a month out from permits, then they call me and say, "Hey, look, we're going to need that construction loan. We're going to be RTI, or we're going to have permits ready to issue here within a month. Let's start that process." So absolutely, if they have the wherewithal to purchase the lot first and go through that process with their builder, then great. One thing I will also mention about this program, this is specifically for people who intend to own the property. It's not necessarily for investors. For investors, we have completely other different programs that are great specifically for that. But this is, hey, I'm buying it. I'm intending to use this as my primary residence. And by the way, if a builder themselves is keeping one of those lots, say they have a 30 lot subdivision, and they're going to keep one of them for their primary residence at the end, we can do that for them as well. And then they would get certain credits for the equity that they already have invested in it
Hmm.
from purchasing the lot and doing the entitlements and everything like that they've come out of pocket. That can be applied towards their down payment as long as they're planning to own or occupy it at the end.
Wow. That's amazing. With regards to soft costs and things too, so again, because it's already all done up front, all the architectural, so they're not, you'd have to front, or the builder would have to have that paid for. You can't really pay for that
Correct.
out of the construction loan.
Correct. Yeah, this particular loan program is designed for the hard construction costs that are going to be fall on the borrower or the buyer themselves, right? Because by that
Okay,
point, the builder has already done all of that. It's expensed all that, and this new loan and the home that has nothing to do with them. That's a completely separate item.
okay. Let's see, I have one more question about that. So let's see here.
Now that's not to say that the builder can't include those pre-development costs in the overall budget of construction, right? And in that case, it could be included. But generally speaking, there's not a direct reimbursement to the builder because this is the borrower's loan, not the builder's loan.
Sure, that makes sense. So if I was to go and get, I assume I have to submit a plan, and then there's going to be an appraisal of the plans and specs. Is that correct? And then you're going to say, well, okay, I agree, it's worth 600,000 to build that house. And do you make the builder account for his profit or her profit? Or is it, if it appraises, it appraises, and if you can build it for
Right.
that, we don't
No,
make you ledger out what you made for a profit.
it's what's called a future value appraisal.
Okay,
Right. So oftentimes they will just see, okay, where is the value now technically, but what's the future value, and the appraisal is based off that future value. And that's why that budget and scope of work is so important, is because the appraiser is going to look at that scope of work, and then his appraisal is going to be an as completed appraised value. And he's going to look for comps for what that property is supposed to be built like according to that scope of work, and that's how they'll arrive at the value, and then yes, the lender gives it that value for loan purposes.
well, sounds like a great program for a builder,
Yeah,
and for a buyer, for everybody.
yep.
Uh, Now you said you got 7 of these going in San Diego. What does a lot cost in San Diego? I can't even imagine.
Well, this last one that I'm looking to is essentially a refinance, right? Because the borrower, the builders already own the property. Really, they're investors, but they're active builders and contractors. They're not building subdivisions. They're doing one-off properties, and they're adding units because the city of San Diego really wants density. So
Okay,
they're converting, say, a single family home into a duplex, and then adding 7 units by adding ADUs onto the property, right?
really?
So
Okay.
they're getting really creative. But generally speaking, they're buying these properties anywhere between 700,000 and $2 million.
Wow. Yeah, a little different than
A
Minnesota.
little
I bet
different than
properties.
Minnesota.
And they are increasing the density, so that's interesting. Yeah, because yeah, they're doing that here down in the cities too.
Okay. Yeah.
Yeah.
No, LA County rolled that out. That was kind of the whole ADU boom came out of LA County, and it's spread throughout California and other parts of the country.
Okay. Yeah, Minneapolis allows ADUs. Edina, where I am, does
Mhm.
not at the moment, but I
Okay.
think that will change. I'm hoping it does because I have
Yeah,
a
you would think so. I'm sure that, because I mean, you guys have good sized lots and everything. I'm sure there'd be plenty of people who would like the option for that and to help cover their mortgages.
totally. You got it. Exactly. Well, Ivan, is there anything regarding this product that I haven't asked you that you'd like to share with the audience at this time?
Well, I think we covered it pretty well. One thing to note is that you want to be working with a reputable builder for this program, because the builder themselves will be vetted as part of this process as a
Hmm?
safety measure for the lender, to understand that they are working with somebody who's competent, is going to be able to complete the project, because the collateral that they're building, right, is what's securing that loan. So you don't want to work with a builder that's built 1 or 2 homes, right?
Hmm.
There's gonna be a certain level of experience that the builder is going to be able need to be able to provide to get approved as the builder for the loan. But anybody who's a small to medium sized builder, say building 15 to 2,500 homes a year, is not going to have any problem with that.
Okay, awesome. There was a builder that you kind of like what you had mentioned. He built 1 or 2, and he kind of built it. It was like a contractor, somebody else pulled the permit, whatever, and so he couldn't deliver the. In Minnesota, you have to give a how 210 builder warranty, an
Mm,
insurance policy, or you have to give a promise. Well,
okay.
um, I don't know about the promise, but anyway, yeah, that's what we had to accept on that particular deal if they wanted to buy that house because that's all that he could deliver. Uh,
Gotcha.
Hope he just doesn't go out of business,
Right,
over the
right.
next 10 years, but
Yeah, that's important. You want somebody, you're getting a warranty with a new construction home, so you want that
yeah,
person to be around in case there are any warranty issues down the road.
exactly, exactly. Well, wonderful. Well, everyone, Ivan is a great guy to work with. I've worked with him in the past and the present, and I'm going to put all of his information down below this video. And feel free to reach out to him wherever you are in the United States. So I'm in Minnesota. Ivan's in California, but he through his company can lend nationwide. So
Right.
he's, as you can tell, very knowledgeable, and he has this cool product. And if you're thinking about building and doing a one-time close, Ivan's your guy. Give him a call.
Thanks, guys. Really appreciate it, John. Happy to help.
Okay. Thank you.